Markets down today after the January producer price index came in hotter than expected. But our next guest sees a bounce back coming. Let's bring in Morgan Stanley Private Wealth Management's Caterina Simonetti. Caterina, great to have you with us. So what exactly did we overshoot? Is it just sort of the assumption that AI is going to kill everything? I mean, what part of the narrative do you dispute?
Well, I think that it's a very interesting narrative, and no one can dispute the fact that AI is absolutely transformative, that is going to change the way we're going to do things and the way the companies are going to operate, change the margins, change the profit potential. But the question is, at what speed and which companies? So we are extremely excited about the AI adopters across the industries. As a matter of fact, we see the biggest adoption, the biggest disruption happening outside of tech, specifically in healthcare, in financials, in industrials and in materials. You know, we see just this great move. At the same time, with the excitement, but also skepticism about generative AI, the jury is still out which companies are going to be affected negatively, where their businesses are going to be disrupted by AI because they're not going to be able to just really kind of move with the times and will miss the boat.
The markets seem to have voted on which sectors are going to be decimated by AI. And they're mostly services, mostly ones that have data as their asset as opposed to hard assets. And I'm wondering how you think about those opportunities, because I'm sure there are a lot of people at home thinking there's got to be an opportunity here. But how do you think about the business model in a world that you can't predict the impact on?
Well, that's what we try to manage the unpredictable. And let's just take software, for example. There are going to be companies that, of course, just experienced a major sell-off. But if there are giant companies with proprietary technology, strong customer relationships, competitive advantage, they are going to be able to adopt, and they're going to be able, in their own accord, actually use AI for their model expansion. But it is very much an extremely competitive environment and a little bit of a wild, wild west, and a race to who is going to have technology that is going to be the most efficient.
Would you rather avoid all of the noise that we're going to go through? It sounds like we're going to go through this, in your opinion, for the next couple of months while the market sifts through winners and losers. Can you avoid that with going with low cap, high quality stocks? And I'm not talking about IWM, but talk to that if you could.
Well, instead of avoiding it, I would see an opportunity in it. Instead of saying that I'm going to stay away from the sector, I actually would be very carefully looking at the sectors that are getting negatively affected by this market and look for buying opportunities and build up positions in the sectors, especially in companies that, you know, stand to just really benefit. With that, are we expecting that with market valuations, where we are going to have not one, but maybe several market corrections this year? Absolutely. But our positive towards the year end is still extremely positive.
Caterina, not surprising to the desk, I'm going to ask you about international. You seem to be overweight U.S. over international, but you love emerging and you're overweight emerging.
Yes.
So talk about that. Talk about where you think your clients should be on a percentage basis.
Right. Well, international, if you look at the larger scope, has underperformed U.S. markets for quite some time. So customers that used to have in their portfolios, you know, the 10%, 12% exposure are now sitting at 2 or 3 and are thinking, should we have more? And we think, yes, valuations are extremely attractive on the international side, but we cannot discount the fact that there is a major conflict happening in Ukraine, that there's still, you know, issues that, you know, they're dealing with. And as much as we want to be excited about the rebuild and investment in Europe, we think that might take some time. With that, with the tariff situation no longer in play, it seems like our relationship with China is getting a little bit more normalized. We see a lot of potential in emerging markets.